Idea of having an audit trail.
Oh no, I made a huge mistake. I've just switched the back. Welcome back to Crypto Warehouse. Today is Wednesday, the 28th of September. It is a balmy 11 degrees outside.
Yes, much better.
Much better.
Much better.
Much cooler.
Yeah, less humid.
Almost hoodie weather.
Oh, honey, if only.
If only.
I bought myself a hoodie with short sleeves.
Did you?
I actually did do that, yeah.
Is that just to keep your ears warm?
It's to get into a hoodie earlier.
Didn't Rocky used to wear sleeveless hoodies?
Sleeveless, yeah. This has got short sleeves.
Oh, right, okay.
Yeah, I'm not quite, there.
Not buff enough.
I'm not buff,
Well, you've had your injury this week, haven't you?
I have, yeah.
And you also almost didn't make it.
Nearly didn't make it through 4th degree burns, or however they judge them.
Exactly. Well,
1st degree, 2nd degree?
3rd degree.
Yeah.
Painful.
They were good, the 3 degrees as well. I like them.
They were. Well, I'm with Julian.
Hello.
Injured Julian.
Yeah.
And Brogan.
Hello.
And we've got a packed episode today. We've got a lot to get through. So let's start with the Bitcoin chart.
Yeah.
And
so
yet again,
yes.
There's not a lot to say about this, is
no,
there?
$18,700.
It went up yesterday.
Yeah, it was at 20k.
I loved it yesterday. I took a screenshot. I'm going to keep looking at that rather than the live.
Look how sad this graph is. All right, look at this. Look at how that drop is just, not very happy.
Bad that.
Yeah.
We're in a range.
Mm.
And we're going to be in a range for a long time. And as we said in the title of the show, we're actually going to get to the reason why Bitcoin is doing this.
Yeah.
Later on. The truth about why Bitcoin is in this channel.
Yeah.
And what has to happen to get us out of it. So we'll get onto that a little bit later. But first,
It's massive.
now, this isn't tinfoil hat, Julian.
Oh, here we go.
Because this is actually the words out of their mouths.
Whose mouths are these?
Well, Brogan's going to bring it up.
It's not lizard men, is it?
No. It's not lizard men.
We think that there are 4 characteristics of, if we were to pursue a CBDC, it would at a minimum have the following 4 characteristics. First is intermediated. Second is privacy protected. But third is identity verified. So it would not be anonymous. It would not be an anonymous bearer instrument. And fourth is transferable or interoperable. So we would be looking to balance privacy protection with identity verification, which has to be done, of course, in today's traditional banking system as well.
So there's that one.
That's the first one.
Yeah.
That's Chairman Powell.
Yeah, this one's a minute, so I won't play the whole thing.
And this is...
Where do we stand? We central bankers. We have been operating as a monetary anchor in relation to the commercial banks and the private money. If we are not in that game, if we are not involved in experimenting, in innovating in terms of digital central bank money, we risk losing the role of anchor that we have played for many, many decades. And we have historical examples of period where the central bank monetary anchor was not there. And that precipitated crisis after crisis. That certainly was the case at the time of the free banking in the 19th century. Do we want to go back to those days? Probably not, I would say.
I don't want to hear a voice anymore. Can you stop her, please? For the love of God. So, you've got the head of the Fed and the head of the EU both saying basically that CBDCs are coming.
CBDCs being
central bank digital currencies.
Brilliant.
Which will take the cash out of your pocket and put it onto your phone or your whatever device we have in the near future. And the control will still be held by them.
Yeah.
But it won't be anonymous. So people will know how much money you've got in your account.
Yep.
For tax reasons, I'm guessing.
For tax reasons, for control. I remember talking about Trudeau last week.
Yeah.
And
this is a good thing then, isn't it?
No, it's not.
Why not?
It's terrible.
Why is it?
Because there has to be privacy.
They're imitating like crypto in a way, but they're just, instead of it just being like a crypto but managed by the banks, it's a crypto but they now know everything, like in terms of how much you have.
But it's still a crypto.
No.
It's still giving validity to the whole industry.
No,
there's no validators.
Well, it is to the people that are oiks like me.
It's not decentralized.
Yeah.
So it might as well be a spreadsheet in somebody's office.
Yeah.
All right. There's no validators.
Nope.
It's controlled by the central bank. Now, September 2021, I wrote an article called CBDCs, a digital wolf in sheep's clothing, which I'll leave a link to down below.
Excellent.
The issue here isn't about having digital currency, which is a good thing, because it removes the need for paper money and forfeits, forfeit currencies and things like that. The issue is about privacy, and he's clearly just said there will be no privacy.
Yeah.
Yeah.
So the issue is, in America, fine, probably isn't going to be an issue. In the UK, fine, probably isn't going to be an issue. Turkey, for example, has its own CBDC, and a new prime minister comes in and he decides that every homosexual in Turkey will have their accounts frozen. Like that, all gone.
Yeah.
So my issue is that this is about control, and it's not a control that they've got right now, because you can have physical cash, but when it's all digital, if it's not anonymous and they know who everybody is, they can seize the assets of their opponents, of minorities that they don't like.
Well, there is another way of looking at it. If you're making it more mainstream and people get used to using it because they think it's a stepping stone, falsely, then eventually once they see the negative sides of it and the gaps in it, then they'll just logically move on to the next step.
You'll be too late by then.
No, it won't.
It will, because what will happen is they will know that you're buying cryptocurrency with your CBDCs.
Yeah, but then what happens to it after that?
They just stop the on-ramps. They ban you or block you from being able to buy cryptocurrency. At the minute, if you're in, for example, Hong Kong, and you've come over from mainland China and you have a bag full of cash, you can take that cash into a crypto shop in Hong Kong and get that changed into Bitcoin, which can be sent to your non-custodial wallet, which is a wallet that you have and it isn't controlled by your local bank. If they get rid of physical cash, they have a complete stranglehold on every single person on the planet. That's my issue.
But they can never get rid of totally of full cash, can they?
They will, yeah.
I don't think they can.
Well, 93% of all cash is digital at the minute.
Yeah, no, we talked about that in the last one, but they still can't get rid of it entirely.
In the next 10 years, it'll be gone. There's already places in the UK now where they don't accept cash.
Yeah, there are.
So how long is it going to take for that to become the norm? And then how long is that going to take for this? Once the CBDC is rolled out, China already has it, and China can already use it to control how much money people have and what they use it for. So if you're overweight, there's nothing stopping the Chinese government from stopping you spending your money on McDonald's. except you're overweight.
That's
now
clever, isn't it, actually, when you think about it? It's pretty clever, that.
No, it's not. It's frightening.
Yeah.
Anyway, it's bad. You can say it's tinfoil hat, but we have it coming out of the mouths of the head of the Fed, head of the EU.
I still think there's a glimmer of hope in that.
I know.
Because before they've said that it were a nonsense, non-starter, whereas now they're actually saying, yeah, we're going to do one of our own. It may be rubbish, but still.
You know 1984?
You're George Orwell, yeah?
George Orwell.
Yeah.
He once said, people do not seize power with the idea of giving it back.
True.
And this is a perfect example of what's going to happen is it's going to slowly creep in and then it's going to kick us in the nuts. So I think it's terrible.
So buy your crypto now, people.
Buy your cryptos and get your cash from under your bed and turn it into Bitcoin.
But not necessarily Bitcoin. There are other ones available.
Yeah,
but we're not allowed to do that.
Non-financial advice.
Non-financial advice.
Right.
There are loads of different coins out there, including my new one, which we're going to call My Bits, which I've been wanting to launch for now 6 years. Imagine that. Imagine talking about that, broker. My Bits. How are they doing? My bits are up today. Brilliant.
Right, let's
My
go
bits
on.
have dropped.
Exactly, you see.
Crypto old bill.
Yes. So, United Kingdom introduces a bill to make crypto seizures
Another
easier.
waste of time, this. Another waste
Quicker.
of time.
So, the Economic Crime and Corporate Transparency Bill modernises existing legislation to counter new forms of money laundering and cybercrime. While not specifically targeting crypto, the bill will make it easier and quicker for law enforcement agencies like the National Crime Agency to seize, freeze, and recover crypto assets. It's a crypto asset. Last summer, the Economic Crime Command Unit of Britain's Metropolitan Police, or the Met, seized hundreds of millions of dollars worth of cryptocurrency in 2 separate raids. In June, the Met seized $158 million after investigating a string of money laundering offences. Just 3 weeks later, under the same investigations, the Met outdid its previous seizure and confiscated $250 million. In general, the UK has been keen to embrace cryptocurrency as a potentially revolutionary technology. At the time, then Chancellor of the Exchequer, Rishi Sunak, said in a prepared statement, "It's my ambition to make the UK a global hub for crypto assets technology." Sunak's primary proposal toward crypto regulation involved regulating stablecoins as a recognised form of payment. Back in January, Britain published plans to protect consumers from misleading crypto commercials. The government said it was bringing all crypto advertising in line with existing financial promotions legislation to increase consumer protection while encouraging innovation. In March, the Advertising Standards Authority, ASA, issued a red alert enforcement notice to over 50 crypto companies, warning them to bring their advertising in line with a new set of guidelines.
There you go, Julian. What do you think to that?
Again, some good, but a lot of bad on that. The advertising thing makes my blood boil.
It does. Who did we have last week advertising it? Bill and Bob from Love Island.
Not just that, but the hypocrisy that you can say that needs to be a lot tighter. When at the same time on UK TV, you've got every betting company under the sun.
That's true.
And
advertising.
Payday loans.
Yeah, it's just nonsense. Ban them all.
Yeah.
Quite rightly. But it's nonsense.
No, I agree. I mean, we could be like the basket cases in America. Ooh. And we could be going after what we consider to be securities when clearly they're not. So at least we're not as bad as America.
No. We are looking at regulation, which I think is a good thing.
We are looking at regulation. But you're right, the hypocrisy is, Fidelity, is it Fidelity who advertise?
Yeah.
Who advertises on the cricket? NatWest and somebody else, isn't it?
Yeah, there is. So
you've got, I suppose you could call it organised crime.
Yeah.
Which is the ones that are regulated.
Yeah.
And then unorganised crime, which is crypto. So they're happy for the organised criminals to get away with it, but not so much for cryptos.
I watched a programme about Topshop last night.
Oh, yeah?
Yeah. All I'll say is it also includes Sir Philip Green. That just tops it all off, doesn't it?
Yeah.
He's still a sir.
Yeah, no.
Yeah.
Well,
we have a
maybe-
comment. We have 2 comments, or a string of comments saying, logically, if you're overweight, then being stopped from overeating is a good thing. Fat people shouldn't get fatter. Well, this is, I assume, in context with the last.
See, they agreed with me that it were a great idea.
It's a great.
It's a cracking idea.
It
But
is.
it's controlling people.
But it's
That's
still.
the
It's
problem
like,
with it.
is it Iceland or
Yeah, but
Finland?
it's controlling people that can't control themselves.
In Iceland or Finland, I can't remember which, they were one of the first countries to bring out this card.
Yeah.
And this card stopped you from buying alcohol if you were an alcoholic.
Yeah.
So if you were certified being an alcoholic, you were only allowed to buy 1 bottle of vodka a month or 2 bottles or whatever it was. There was a
Yeah.
certain limit that you could buy.
Problem with that, straight away. Alcoholics, very, very popular people to be around. Just get somebody else to buy it. Don't they? It's a stupid idea.
Well, I
To
mean,
be honest, going back to the McDonald's, I've rethought about it. It's a stupid idea. You send your mate in, don't you?
Yeah.
Mm.
Well, when you were 15,
Yeah.
you sent the tallest kid in to buy your 14
Exactly.
to Castlemaine Forex, didn't
Yeah.
you? Which was normally me.
Yeah.
And then the Indian shopkeeper, lovely bloke. I'm not going to mention his
Diamond
name.
White. Right, Diamond White?
Yeah,
Yeah.
bottles.
Yeah.
So you know what, you'd send in your tallest mate for that. So I'm sure in this future
You'd send
you'll
your
be
skinniest friend.
you'll send in your skinniest friend to
Skinniest
buy your
friend, yeah.
McDonald's.
Yeah.
He'll probably give you more food
Yeah.
because you look like you need feeding up.
Yeah. But he won't be able to buy 2 meals because that would look odd.
Well, yeah,
So he's just going to
If
have
he's
to
very
buy
skinny, maybe he's
21
really hungry.
nuggets instead of 6.
and a kid's meal for himself.
Yeah.
Yeah, that's a good idea. Well, thank you for that.
Yeah.
Now
no
let's move very quickly on to another ridiculous idea. We're starting off with the ridiculous ideas, and we're going to move on to the good ideas.
Yeah.
I like ridiculous.
Well, this is you're going to
And
love
I'm
this
thinking
one.
them through live, which
Well,
is even better.
This is. I can't even believe I'm saying this. This is some clown with a capital C,
Yeah.
suggesting that
Has he got
we-
a horn? Clowns have
yeah,
horn.
and a big red nose and a big green
Yeah.
Afro.
Rainbow afro.
Brilliant.
rainbow afro.
Yeah, white paint and all that.
He has suggested that they introduce a refund mechanism on the Ethereum network. But before we read the article, we'd just like everyone listening to look up the word immutable.
Yeah.
Carry on, Brogan.
Well, the clown leader said reversible transactions should
the clown
mitigate.
leader.
Yeah, the leader of the clowns. Reversible transactions should mitigate crypto theft. The proposal puts forward an opt-in token standard that would enable victims to report theft to a governance contract, with algorithms helping to identify and freeze ill-gotten gains.
Ridiculous.
Scroll down. Well, there's no highlighting in this, so I'll just read it myself.
Has it been taken off?
The way it's gone.
Do we need any more than that?
No.
I mean, he's saying basically that you just should be able to scrap what you've done.
Well, Vitalik mentioned this a long time ago, and this chap from Stanford University, him and his mates have come up with an idea where, let's say you have your funds stolen
Yeah.
from your account. You can go to somewhere
Yeah.
and say, help, my funds have been stolen.
Yeah.
Then a decentralized group of judges will look at the case, and if the funds have been stolen, will issue you with a reverse transaction and will actually get your funds back and send them back to your account.
Okay.
Completely unpractical,
Totally. Yeah.
completely against the ethos of cryptocurrency,
Yeah.
and on a very, very, very valid point for businesses. One of the reasons businesses like the idea of using cryptocurrency is the lack of chargebacks.
Yeah.
So Visa and Mastercard for the last 40 years have held companies
Ransom.
ransom over chargebacks, which have nothing to do with the company. It's
Yeah.
fraud.
Yeah.
It's not fraud on behalf of the company, it's fraud on behalf of people buying things and wanting the money back.
Yeah.
And Visa and Mastercard have gone, there you go, you've got your money back. And then the company gets the merchant account closed down and they're out of business.
Yeah.
So what crypto allows you to do is accept payments in cryptocurrency for all of your goods that you're selling, knowing that you're not going to get a chargeback.
Mm.
This this not only goes against it, but goes against everything. If this goes through, which it's not going to go through, by the way, there's no chance this is going to go through. If it goes through, this would ruin Ethereum.
Yeah.
But I tell you, the people behind this, if you go and find out who the top donors are to Stanford University, I guarantee you're going to find a BlackRock or a Goldman Sachs or a JP Morgan somewhere who's trying to do this via academic means. Because they'll
I
want
reckon
that.
our first sponsorship should be Baker Foil.
Here we go again. You can't mention it. You can't hypothesize about anything.
No.
I'm going to go, after this podcast,
Do that.
I'm going to
Yeah.
go and find out who the top sponsors are.
Yeah.
And in the next stream,
We'll push it there forward.
yeah, maybe on Saturday, if you've had your skin graft by Saturday,
Yeah.
right, we'll go through it. If not Wednesday, when
Brilliant.
you're in recovery.
Brilliant. Okay.
So that's that one. Now
Yeah.
we need to get on a bit because we've got a lot to talk about. Now, this is the truth
Of Bitcoin.
about
Oh,
Bitcoin.
this is your graph.
This is the graph.
Looking forward to the graph.
And this explains everything that's happened to Bitcoin in the last 4 years.
Okay.
Take it away, Brogan.
The dollar is at a 20-year high. That's bad news for crypto. I mean Bitcoin, sorry. The dollar index is at its highest level in more than 20 years, and risk assets like cryptocurrencies are feeling the pain. The dollar index has jumped to 20-year highs. While the dollar is soaring, Bitcoin and other cryptocurrencies are struggling. The dollar index, DXY, a financial instrument that measures the price of the US dollar against a basket of other currencies, hit a fresh 20-year high Friday, sending other world currencies and risk assets lower. The crypto market has been hit particularly hard in recent weeks due to renewed strength of the greenback. I assume this is the graph here. So this is the inverse graph, basically. It's a direct correlation between the US dollar currency index. That's the blue, so you can see it going up. I assume this is based off years, so maybe it's like 14 to 19, so over a couple of years. And the
There you go,
Bitcoin
Julian,
price,
on the screen there.
Oh, yeah.
the Bitcoin price is gradually going down. So we can clearly see there's a correlation between these two.
Massive. Well, it's a direct correlation.
Yeah. So, as the Fed raises rates to fight inflation, it tightens US dollar liquidity. This should help bring inflation back down by making it more expensive to borrow money, thereby reducing demand. However, one side effect of such a regime is that it makes the dollar a much more attractive investment. The tightening of dollar liquidity means market participants have less cash to invest in riskier assets like cryptocurrencies. Liquidity from the global economy is flowing into US dollars at a record pace. This effect was coined the dollar milkshake theory by Santiago Capital CEO.
That was a great song. Do you remember that?
What's that one?
My milkshake brings all the boys
I
to
never
the
liked
yard.
it.
That's what it's called, Brogan. That's where it comes from.
Oh, is this why it's coined that?
Yeah.
Oh, fair enough.
My milkshake brings all